Welcome to the YouTube channel Message of the Chart. IPO, lot of IPOs, more and more IPOs. This is what happening right now, but there are quite a number of people who says always that in whatever number of lots I am applying, I am unable to get any allotment in the IPOs. In such a scenario, if we are able to spot some opportunity post IPO, it would be good as a trader for us to exploit the opportunities and earn some profit. So in this video series of post IPO opportunities, we will have a review of all the IPOs issued from 2020 onwards and see is there any opportunity right now in them. Today in this video we are discussing about the SBICARD. The IPO came in 2020. Issue price was 755. Let us see a quick look at their business. They are offering a variety of credit cards. If you see, they offer specific to certain target audience, tie up with many people. So they have lot of variety of opportunities for the credit card seekers. Depending on individuals' need, one can select the card, whatever they want. There are too many opportunities. They have tie-up and they offer for exclusive target customers. Okay, the list seems to be never ending. Lot of offers they have. And along with such variety of credit cards, they also have some offers always available. They offer some special discounts during some festival season or on tie-up with certain sellers. So anybody having any credit card may be receiving continuously such information. Now let us move to the financials of this SBI Cards and Payment Services Limited. Okay, return on capital employed at 10%, return on equity 16.9%, and the debt to equity is 2.87. Being in the field of finance sector, this debt to equity is acceptable provided all other things are normal. Quarterly results, revenue, it is steadily, it was increasing and now it is almost in a stable condition. There is no very high movement, there is no high reduction also. Profit, it was rising continuously up to 2019 December. Afterwards it started declining. Even June 2020 it was okay. So the pandemic effect may had their impact from September quarter result onwards. But this quarter compared to previous quarter is somewhat better, but compared to the same period previous quarter, it is not that much encouraging. So still a long way to go. Same for the profit before tax and the net profit figures also. Revenue from 1,438 crores in March 2014, it is 9,301 crore in March 2021. Some good improvement here is available here, but for the pandemic here the increment would have been much higher. So once the pandemic related issues are solved and the economy is back to normal, we can expect a good revenue leading to profit also. So the situation is almost the same everywhere. Here also compared to 2020, 2021 is poor. Because, definitely this is due to the pandemic only. But are they doing any other activity? Okay, here one observation, reserves from negative in March 2014. Now it is 5,359 crores in March 2021. It is a stable and steady increase. Very good increase. Borrowings also increasing. Being in finance field, it is acceptable. One thing I am observing here is that they made some good investment this year. March 2020, it was just 1 crore investments and now it is 958 crores. So this is one development here where they invested, what the kind of returns they may be getting, that we have to wait and see. Maybe as they couldn't lend more through their card business. They may be going for some investment temporarily. Once the economy revives and the demand increases, they may redeem this investment and put into their normal business. Net cash flow is positive. Shareholding pattern, promoter holding is almost stable. FII holding increased. This is a good sign from 8.62% in March 21. June 21 quarter it is 12.47. There is a marginal increase with domestic institutional investors also. Public shareholding, there is reduction, and even in that public, yes, there is 6.5% holding by one entity. That means the actual public holding is very less, which is good for us. And one more thing I wanted to see is whether we are having NPA, any NPA, what is the condition of NPA? Being in the finance company, as we are allowing the higher debt to equity ratio, we have to keep an eye on the NPA. Let us have a look at that. This is the latest quarterly result report. We'll go to the NPA part directly. Yeah, it is here. Gross NPA and net NPA 3.91 and 0.88 compared to previous June 2020 1.35 and 0.43. So the pandemic is having some impact on the NPA, but it is not at an alarming condition. 4.99 and 1.15 respectively as of March 2021. So now the thing is there is an increase in the gross NPA and net NPA, but it is quite natural due to this lack of proper economic activities being carried out due to the pandemic related situation. This may be happening, but it is not in alarming condition. We can wait and watch for further 2 to 3 quarters to see whether it is increasing or stabilizing and then going down. You will have a look at the chart. This is weekly chart. The data available is less because it is a IPO. The listing was around March 2020, it seems. Okay. Now if you see less than the issue price, it moved initially, then it started climbing up, consolidated a little bit, then it moved to a high level, profit booking dragged it down, again moved to the almost to the same level, again profit booking dragged it down. Now it is again starting to move, and the thing we are interested in, we have to observe is, if you see this area, yes, it moved down, then it started moving up, again it came down, again it started moving up and crossed the previous swing high with a good volume. If you see here, the green candle is having a good volume. So this is the level where one could enter. In present IPOs, if at all we get such opportunities, such pattern we can keep in mind, and in this green candle one can enter as it is decisively crossing. We are in a weekly chart. Once we are going to the daily chart, we will be having more clarity on this exact entry point. Once we are entering, we can write this. Then here consolidation. So it is just right now seems to be in a range. We will have a look at the daily chart and try to find out the actual range. Okay. Almost within this range of around 900 to 1100, it is just traveling, because see, earlier this 900 level was a resistance. It got resisted and went down, then consolidated, then breached this level, then it went all the way up to above 1100, profit booking, dragging it down, again getting support, retesting the support, once again retesting, shaking out, retesting the support, going to the resistance level, profit booking, again trying to breach the previous resistance level, couldn't do it, so profit booking, it came down, and now it started moving up again. This is very minor down move here. So now what we can do is, whenever it comes near this 900 level, we can enter. Whenever it is breaching, if at all it breaches 1100 level, we can add more. This is one idea. Or if we expect the consolidation to be there for some more time, I expect that, because at least 2 to 3 quarters may be required for the actual effect to be shown in the balance sheet. Or already, as they are having good reach, we will have a look at the reach about this. That also we will have a look before continuing the discussion here, because that is very important. This data is taken from RBI site, so it is authenticated information. As on 30th June, this is the latest information available. The number of outstanding cards as on this date for the various players in this field is shown here. If you see, HDFC Bank is the top, followed by State Bank of India, then ICICI Bank. All others together around 40%. So the percentage wise credit number of cards issued and outstanding by these players. 19% market share is available with the SBI, 23.6 by HDFC Bank and 17.57 by ICICI Bank. All others are around 40. Now the thing is, this is one information. There is one more information we have to take into account, that is the transaction value, because number of cards is one thing and the transaction value is another thing. We will have a look at that also. This is also taken from RBI side, authenticated information. SBI around the same level of 19%. So all are actively using the cards, we can assume. Overall, there may be some heavy users and some non-users, but overall it is almost the market share in number of card holders, the number of cards outstanding, and the transaction value is almost the same for SBI. But HDFC Bank is outperforming in this area. ICICI Bank is almost the same, slightly outperforming. All others combined together are gradually not performing up to the level, because around 40% of cards, they are having the transaction value of a 33.74% only. So here there is scope. If they are competing with the performance level of the private peers of HDFC Bank and ICICI Bank, they can improve this. Scope for improvement is there. Once the economy revives, they may be able to do this in a more positive way. So we will go back to the chart now. So we will continue our discussion in the chart. So here we can find one minor support level is getting generated, this level. I will just draw a horizontal line here, somewhere here. Earlier also it got support at this level. Now here also, see, 1, 2, here also, here this is a consolidation area, shakeout and a consolidation. Here again it got support, here also again it got support. So now it may get the support at this zone also. So 940 levels. So if it comes to 940 levels also, one can enter. If it comes to 900 levels, we can add. And partially book profit, that would be better, because partially booking profit on 1100 levels, and if it decisively breaches this level of earlier high, this level, 11, see this 1110 to 1136, this 25 rupees, one should be able to forego also for some part of their holding. We are entering here in 900 to 940 range. We will partially book at 1110 range, 1110 plus or minus. Then if it goes above 1136 decisively, we can add. Or if by chance we get a very good green candle crossing this level nicely with a good volume, we can hold without partially booking profit also. Partially booking profit is because like this, if it is going up to a higher level and again all of a sudden it is coming down, twice it happened so. So especially here, if you see, it's a gap down opening and closed very low. You see, on this day it made a high of 1137. The next day it made a low of 1061. So more than 100 rupees almost. Not 100 rupees, but still considerable amount. Like that it may happen. That is why when it nears this 1100 to 1110 range, a partial booking of the profit may make a good sense, because 1, 2, on 3 occasions almost in that zone it got reverted. So it may spend some time in this zone, and then it may with a good volume break ultimately it will go up. But the thing is, when nobody can answer. So our strategy would be to enter in this range, partially book profit here. If it goes above with a good volume, we will enter again, add again. Or if it crosses this with a good volume right away, we can continue to hold whatever we are entering with a trailing stop loss. So this is what the chart says to us. Hope this video may be of some help to you. We will come out with more similar videos in the days to come. Till then, bye.